we're now back at Tackle Trading's Halftime Report, our daily show where we go through the markets one step at a time. And we are now live here on Tuesday, August 3rd, 2021. Back with another fun show for you guys as we break down these markets. I got Coach Mark, Coach Matt, and Coach Emily here back for our regular Tuesday edition of the Halftime Report. Going to break down the markets technically. We're going to take a look at the commodity markets. We're also going to go through a couple of different corporate items, including some stocks that are in the earnings cycle again and in the news. ConocoPhillips, a couple others that grabbed our attention. Let's bring the coaches in one at a time here to start the show. Matt, how are you doing today, sir?
Doing fantastic. Excited to be here, Tim.
And Mark, what about you? How are you doing on Tuesday?
You know, I'm wearing beanies because the weather is only like a little bit hot and not scorching hot, and my mood is directly correlated. I'm also, listen, sideways trending market here in the last 6-7 trading sessions. It's a weird market, right? It's a little weird market, because of course my queen. I always put the most due diligence in on a Tuesday morning to find you the utmost gems I can find.
That is a nice way to start the show.
And Emily, the queen, do I have to call you queen this early in the show as well? I start kissing your butt now so I don't get floated later.
Good choice.
How are you? How are you doing today, my friend?
I'm doing great. Great to be here.
Let's get down to market analysis. By the way, if you're out there watching the show right now, a couple things I want to do before we get too far into it. Number one, click the subscribe button, click the bell. That way you're part of our community. Whenever we go live, you come back and join us on a daily basis. And Matt, I would be remiss if I didn't plug a podcast right now. We had an excellent, fun show yesterday with Pete Thomas. You and Pete sat down, had a conversation about the commodity market, the metals market. Trading Justice episode number 436 is now up on the site. Now it's out there on all podcast apps. Just talk a little bit about that, Matt. How did that go in your interpretation? Because I thoroughly enjoyed the conversation you and Pete had.
Well, I always enjoy the pleasure of when I get a chance to talk to Pete and really get his insights on what's happening in the commodity market. And we dove into the precious metals. We dove into we discussed the industrial metals versus the precious metals and what's going on. We talked about the fundamental backdrop and where they are in relationship to their charts and what could, spark some buying interest. And, Pete always brings those just in-depth insights that you just don't get anywhere else, right? This mine in this country is doing this, or this supply and demand argument. And he really just does a great job of opening up my eyes to, potential analysis that could impact asset prices. And I just thoroughly enjoy anytime I get the opportunity to bring him onto the podcast. And, just a great friend of the Trading Justice podcast. And I hope our listeners at the podcast and throughout Tackle Trading and our community enjoy that interview as much as I did.
He's got insight, he's got knowledge, and he's fun.
He just really does have a different perspective in how it works because of where he's at in his industry and his knowledge. I mean, he just gives you tidbits to think about. And this is tidbits to people who live this stuff, right?
Well, and for those of you that don't know who Pete is the VP of Zahner's Precious Metals out of Chicago, and he's been in Chicago trading futures ever since gold got reintroduced into the futures market. So you younger traders, go ahead and do a little Google research on that one. You'll see how much experience Pete has.
Yeah, that's right. That's right. I dropped the link to the podcast, guys. If you are a podcast fan, make sure that you grab it, listen to it sometime today and get it downloaded on your favorite podcast devices and let us know how it goes. So I love the interview. I know you guys will as well. All right, let's get down to market analysis. Let's start our show here today. Got some earnings to round up a little bit later. Mark was talking about the sideways consolidation. It is a tight base up there on the top, Matt, and it's holding those moving averages right now. I still like the potential for a breakout as it's kind of cooking here. What are you seeing here technically on the S&P 500?
Yeah, I still like the breakout to the top side, but at this point you gotta break out, and you got a little bit of a K trade scenario establishing itself in the broad markets on the intraday charts. And when you look at the broad markets, we could have been having a vastly different conversation here today, guys. One data point got me a little, piqued my interest towards the market open here today. You had a little bit of Chinese news on the overnight action, but it was really this cash open right into this range right here. And let me lower the time frame down a little bit, and you can see what I'm talking about. Here's that cash open right here. And so the market's just kind of stabilizing throughout the entire overnight action. Not a lot of price difference, just a little up, little down. But then here at the not the futures market, but the actual cash open in the stock market, it just got punched really, really aggressively. And you see that volatility just pick up to the downside here. 43.65 proved to be a major support level from an intraday perspective here earlier today. That coincides, if you'll bring it out to a longer intraday time frame, to the literal penny right there to the pivot point here. It's in the zone over here. We talked about this technically yesterday, how it was forming up the neutral range here between 44.20. Now you really kind of got to look at that 43.65 level to solidify that intraday range you're looking at from a K trade perspective. And so the consolidation, I mean, it's no doubt real. You see it over the course of the last 5, 6, 7 trading days following this breakout. You're looking at this as a defensive nature, and as long as it does hold that 20-period moving average that is now caught up to the price movement, and as long as that K trade stays alive within this pattern here, and no intraday levels are violated of any aggressive nature, you're still lining up the potential breakout.
And as we're looking for this potential breakout here on the S&P 500, the Dow is in a very similar condition, in my personal opinion. So is the NASDAQ. Obviously, the Russell's stuck in the mud. Which one do you like the most from that perspective, Matt? I mean, if they all catch, they're all probably going to run at the same time. Is there a ranking here, or do you have it like 1A, 1B, 1C, and then the Russell? I mean, where you at?
Oh yeah, it's for me, it's NASDAQ, S&P, Dow, and then Russell 2000.
Yeah,
the Russell 2000 for me is a fair bit of distance between the bias between the NASDAQ and the Russell 2000.
Mark, how are you reading these price action in the market right now?
I mean, it's a little tricky, and at the same time, it's not. And let me say, what I mean. You have a lot of stocks that crappy patterns, right? Or things that you hope to develop but are in bearish retracements coming down. I'm looking at you, Delta. I'm looking at you, Exxon. You have breakdowns like on Activision that are playing out. And so, this is one of those. The market can be doing that, but if you bought the dip on Activision, well, you got some trade management decisions potentially and stuff like that. So there's a lot of charts out there that are crabby, that are in development, that are a little ways away. But then you got broad markets, and you got some tech charts, and you got some material charts that have developed in the last few weeks that are looking pretty healthy. We use this phrase stock pickers market all the time, top-down analysis. Broad markets, and I like what Matt said there about potential K trade. And I like what you said about potential breakout. I mean, there's a lot of things that can develop from the broad market perspective. And so this has really been one of those like top-down analysis type stretches where broad markets have been strong, right? But there have been areas in the broad markets that have definitely carried the weight. And then there are some that are carrying zero water at all. So, that classic top-down analysis that we use so often at Tactical Trading, I know Matt and I are huge believers in it. It's been a pretty good guide to help direct you where you should be looking recently.
Mm-hmm. In terms of different players in the market participating, I mean, even today, you are getting some areas that are really strong. Energy is getting a nice bounce back day. Industrials, materials, tech is even having another extension of its rally, but healthcare is looking as strong as it's been for the entirety of the trend right now. Eli Lilly reported earnings today as well. So you have strength in the market, obviously, but then you got the communications sector kind of slipping a little bit. That's where the S&P with all the balance still can kind of hang out where it is. I do want to get your read on communications here, Matt, because that is right in a bull zone historically, the way that, that pullback is playing itself out, but it dipped below the old pivot. And we've also got some pressure out of the gaming stocks in this sector today, specifically Take-Two, some of those out of China as well, after Chinese state media called some, online gaming, the opium for the masses or something, I believe. Mark, what was the exact phrasing on that one?
It wasn't opium from the masses. The exact phrase was opium for the mind.
Opium for the mind.
Online gaming is opium for the mind.
They had a few zingers in there. They called it spiritual opium. They called it opium for the mind. I heard opium for the brain. They had a message to put out today.
And
Opium was definitely on the word calendar in China today.
They wanted to remove that. Then they went to spiritual opium. So they went from opium on the mind to spiritual opium. Yeah, China. This to me, this is a real story that may have some legs in the gaming community, and it's a little concerning. China's obviously, it goes without saying, a major player in this industry, and China has came down fairly aggressively on other industries in recent history. Gaming, this isn't the first time they've targeted gaming, by the way. They went after Tencent in 2018. They went after Tencent in 2019. So this is an ongoing thing for Chinese regulators. But recently China has cracked down on certain e-commerce, online education, and now they're cracking down on a little bit of gaming, and very similar to the story having some legs on the online education side. I do find it fairly concerning that they're cracking down aggressively on the gamings.
Mm-hmm.
Now, Matt, my question to you, and I didn't get a chance to ask you this in pre-production, but you know games well, and you know that a lot of these popular titles that U.S. companies have huge exposure in China. I mean, China's a huge end consumer user of video games. Do you worry about any U.S. companies with high gaming exposure to China on this?
Well, yeah. I mean, when you're looking at, well, there's 3 U.S. gaming companies. You have Activision, which is the big dog of all of them. You have EA, and then you have Take-Two Entertainment. Okay. All 3 of them are in precarious trends, fighting against some major support levels, and all of them got blasted a little bit today on the news. So, yeah, I do think that these U.S. gaming companies need some stability before you start looking at them from a projection to the top side.
Mm-hmm. Well, and Activision, by the way, this isn't just the Chinese, article out of their state media. Activision's been in the news with some lawsuit stuff, obviously from the state of California. You also had some earnings roundup out of the gaming sector. They've got like a triple whammy here today on the gaming stocks, and Take-Two obviously gapping below support pretty precipitously. I mean, troubling for communications, and gaming is an important component of communications. But back on the XLC for 1 second, if we can, what do you see in the pullback though? Because I still see a retracement that could be healthy here. From that perspective, Matt, it banged right into that rising moving averages. The 50 is right there. The 20 is below now. So you got a little bit of mixed data in there. But what are you seeing here?
Well, I mean, I'm not sure I would call this a retracement any longer. I felt like it was a retracement flag-based pattern as it was kissing off the previous resistance level. I think that pattern got blown up, quite frankly. Mm-hmm. And I do think it needs to stabilize here around the 50-day moving average. And the 50-day moving average has been a very good longer term buying opportunity, but I don't see it as a swing trading opportunity.
I see. Yeah. Other sectors that did grab my attention, healthcare, obviously on their strength, and even utilities, a little defense out of utilities picking up, looking pretty good. So you got participation. This is the market we've been in, guys, for quite some time. Different sectors, different weeks, different days, participating as the market just kind of hanging out and holding its trend. Coach Emily, let's get you in here for a second. I just want to get your broad read. How are you approaching these markets? What's your read on the technicals on stocks right now?
Same routine as always, kind of like what Mark alluded to earlier. It's kind of going through those, going through the top-down analysis and finding what you need in your portfolio and which area of the market you need exposure to. And last night in our Dynasty Lab, we kind of went hunting in the industrials and financials, and we found some great picks there. And, it's just doing what you always do and just finding whatever fits your portfolio and whatever, fits your needs. And it's just rinse and repeat. Yeah. So we found exposure in industrials. We were looking at a couple of stocks there and some financials. MS was looking pretty good. Capital One was also looking pretty good in the financials. So we found some good picks.
Mm-hmm. And it is one of those markets where there's going to continue to be good picks, obviously. And hopefully we got 3 good picks for the Queen's Court a little bit later in the show. Anything else on broad equities, indexes, or sectors you guys want to hit real quick before we move on to commodities? Let's do it. Crude light next, if we can, then gold. We'll work through the commodity market. We got some earnings roundup a little bit later, and then we got a few stocks in the news, and we will hold another edition of the Queen's Court. Here we are, crude oil, in the middle of its larger consolidation. And are we getting a new box now?
You are.
We're getting a new box. I was
getting a new box.
All right, let's see.
Tim gets excited.
This will be the most exciting part of the crude analysis today.
It's true. It is true. We should get in a box.
Ooh,
Wow.
that's the box.
So
Get
pretty.
in a box.
Until it breaks out of that box, don't overthink it. Is that the basic takeaway here? Marky, what's going on in crude light these days? What do we
Like
need to be
I
watching?
said, the box is the most. You're gonna ask me that, and I'm gonna come back harder at you every day that you ask me that.
Uh-huh.
But listen, we've been talking about potential consolidation in crude oil for a while, and wide consolidation, $10. This happens on crude oil. This happens on crude oil. This is historically very normal. You run up to resistance, and the patterns can change a little bit. Sometimes you run up right up to resistance. Sometimes you base there before coming down. Sometimes you just get slapped down. Sometimes you fall short. The nuances of the consolidation will change, but the general up and down consolidate price action doesn't change a whole lot. So, it's really going to find something. It's going to be hard to find something interesting to say unless there is a major news story, which there's not.
There's not.
Or a break of resistance or support.
We're at $70 basically,
Right there in the
between
middle,
the
right?
$10 range. Yeah, let's move on. All right, gold next, if we can. Kind of a little bit of a similar analysis now. Anywhere between 1800, 1840, we're going to be in this little bit of a range. I don't think we need a new box yet, though, Matt. Those lines are still right intact. Anybody want to give me an update or read here on gold?
No, slowly but surely, gold continues to solidify support levels that are increasing. Resistance at this point is horizontal. When you have support that is increasing over time, and you see those short-term increases in support from 1760, 1800, 1795, 1800, up to the 1810 level, right where the 20-day moving average is right there. Again, it's subtle, but whenever you see this type of increasing support, and as support increases, you see the slowing momentum in the candles every time. While you have horizontal resistance, that puts a lot of pressure on that potential breakout. And so I just think that, as gold continues this challenging 1800, 1840 environment, the data is getting better as we're approaching that potential breakout.
Yeah, and we'll keep an eye on that. It's obviously got to break out before we do anything with it, but definitely keep an eye on it. All right, Bitcoin, last one here, actually, and let's take a peek. Matt, is this a retracement developing? Are we just a little too early for that? Where are we at here on the charts?
Well, it certainly could be a retracement that is forming. As of right now, you got it as a little bit of a flag. You got it as a little bit of a high base as you're approaching that $40,000 by $42,000 potential breakout. You're going to like any retracement here in Bitcoin, in my opinion, as long as it stays consistent in its price movements. You got a downward movement in price, obviously, but I don't see that as a negative as you're overextended coming into resistance. You see the continuation of that momentum today, and you could give it a little bit of context and say, the SEC chair was up there saying some negative things about the crypto space, and they're fighting for more authority to regulate this space more. What I found interesting with the SEC interview with the head of the SEC regarding Bitcoin today, I don't know if you guys caught this news, but he was asked a question regarding an ETF for Bitcoin, and he's like, "Oh, we need to regulate the industry more. There's too much fraud that happens in this industry," and the whole time I'm thinking, yeah, but we got Greystone Bitcoin Trust, we have Bitcoin mutual funds, we have Bitcoin proxy investments, but yet we can't get an ETF that actually we get Bitcoin futures that everybody can get drunk on, but we can't get an ETF that is regulated by the SEC. We can get 4 times leveraged ETFs in the financial sector, but we can't get a properly leveraged Bitcoin ETF. I mean, it's really a joke at this point, but a little bit of that negativity kind of spilled into the price action coming down. I don't mind it. I think this will make it look even better. Thank you, SEC, for not knowing what you're doing. It brings it down into a support level, and you have a cluster of moving averages coming up into that. And so as you form this flag, as you form this base, however you look at it, I am looking at it as a flag at this point. As you form this flag, watch it form support somewhere in this 200-day moving average. It's right there on the 9 EMA. It can be stopped on a dime like an Allen Iverson crossover back in the day when he played for Georgetown and just drive back up into that resistance level. And we're at that stage in this flag with these types of support levels that a pivot point could happen at any point. And so you're looking at this as a support build at the 200-day moving average with the backdrop of these other moving averages that will catch up over time. That retracement, Tim, I'm gonna do you a solid here.
All right.
I'm gonna do you a solid, and I'm gonna show you something. You see that 200-day moving average? That's a 38% retracement off the previous wave up. You see that zone, and this is the zone I'm talking about where this could drive back down into. The first zone is obviously in that 200-day 90 EMA right north of the 38.2% retracement. You got that backstop of Goldilocks between the 200 and the 50-day moving average. Anything under the 50-day moving average in this retracement, I think, would change the dynamic of the pattern. So I'm looking at anything from support from the 200 to the 50. Don't know where it's going to form. That's just the zone that it could form in. And if it does, give it a slowing momentum candle, upward movement in price, you'll have your retracement. So I do think it's in one of those very interesting technical environments in Bitcoin.
And developing pattern that we're going to keep an eye on, obviously. And anywhere into the zone that you get slowing momentum and a little bit of a trigger, refire that. It's going to be interesting. We'll see how it plays itself out.
No, and I think that was so good. I mean, and when we ran into this resistance area, like, I know Bitcoin to the moon always, but that kind of rate of ascension would not have been sustainable had it kept going past that. It would have created some real nasty things if the internet
everybody misses it, Mark, besides the investors and the algorithms.
And so this, if you want a breakout of Bitcoin, this pullback is one of those requisites of a breakout that could last. So if yeah. I love the technicals, and I love that you dropped some Fibonacci on Tim.
Little Fibonacci retracement knowledge on Tim's head.
Give me a little fib on Ethereum if you're gonna tease me. I mean, not gonna happen. Not gonna happen. All right. Although I do think the Ethereum chart is looking good. But
I'm dropping fibs on everything today.
Hey man, I'm good. Whatever. All right, let's move into our next segment as we always do. By the way, unless Coach Matt, you want some speculation on when the Fed's going to taper? No, I don't. Fed Governor Waller says he's open to tapering and starting the conversation in September if the labor market improves. I don't believe that.
We're still in the if A, then B?
Yes.
Okay.
If this happens, then we'll say this in the future, and then we might do this down the road. Yeah. Okay, Fed. Okay. Thanks for the clarity. All right, moving into Stock Talk next. And by the way, if you're out there watching this program, we do this show each and every day. The markets are live. We go through these stocks, indexes, commodities, and then we go into individual companies. We're now going to move into a segment we call Stock Talk. And if you've not done it yet, give me a thumbs up on the show. Let's get the analytics up there. Let's get the word out for tackle trading, and let's roll. Earnings roundup, obviously, in the last couple of weeks. This has been the focus of what our conversations have been. Matt, I got a very, very simple question for you. Which stocks grabbed your attention today from an earnings perspective?
Well, a couple stocks grabbed my attention here today. Let's go ahead and start in the energy areas of the market. Let's take a quick look at XLE as it fights this bearish retracement. And as you know, the bear stop out day, right? Bear stop out day. We all like bear stop out day. Who does not appreciate a good bear stop out day as a bullish trader?
Well, I was going to say bears, but as a bullish
wait, they're extinct. Come on, the real bears are just algorithms.
All right.
But when you're talking about bear stop out day, that would be reclaiming this 20-day moving average and give us a close above that 50 handle, and I think you would get that bear stop out day. Well, did Phillips 66, PSX, as well as ConocoPhillips, the two next juggernauts to report earnings in the energy space, can they help that right shoulder breakout or bearish retracement, bear stop out breakout type analysis. Let's take a look at ConocoPhillips first. Conoco comes in today at 127 versus the 115 expectation. Revenue came in at 10.2 versus the 9.6 billion expectation. So a nice healthy beat on revenue numbers as well as EPS numbers. Revenue did result in 154%. And again, Mark, we've seen this throughout this entire earnings season in certain industries. Energy is obviously one of them. When things were shut down last year, to where they're now cooking this year, we're seeing some just really quite historic increases in revenues year over year.
Everything's a growth stock.
Oh my goodness. What's the number one value company in the world? Let's make that a growth stock.
It's all growth.
That's a good debate. The number one value, not value, I shouldn't say value. The number one defensive company in the world. Let's just make that a growth-based storyline. But ConocoPhillips comes in and do a 154% increase in year-over-year revenue. A very good and passable grade coming out of ConocoPhillips, in my opinion. Technically here, very similar to what you're seeing in the sector itself, maybe performing slightly better than the sector. But once again, you're fighting against a bearish retracement. Now you're seeing consolidation between 55 and that the cluster of the 20 and the 50-day moving average. So once again, Conoco most likely needs a little bit of sector and industry help to break out of those ranges as well. But decent earnings coming out of Conoco here today. Phillips 66 PSX here, a little bit more of an underperformer, but we're talking more of a refinery company than a driller. Phillips comes in at 74 cents versus the 71 expectation. Revenue was extremely impressive out of Phillips 66, coming in at 27.9 billion versus the 22.6 billion expectation. That resulted in they just weren't as good as Conoco, but they still did 149% increase in year-over-year revenue. So coming out of Phillips and Conoco, very similar reports, beat on EPS, beat on revenues. I would say, the beat on Conoco's EPS was slightly better than Phillips, so the beat on revenue on Phillips was better than Conoco, and they both came in at 154 and a whopping 149% increase in revenue year over year. Both of them were expected to do this. We saw very similar results out of Exxon and Chevron last week. It's about the sector. Out of every sector in the market, this is about the sector, and the sector needs to reclaim those resistance levels before you see anything. And again, I'm looking at that $50. That's right where the 20-period moving average is. More earnings are coming down the road here with the energy space, though, and that's going to give it a little bit of a maybe you can give it a little bit of a tailwind to break out of that $50 resistance level. But those two were fairly decent reports coming out of the energy space here today, and follows on fairly decent reports that we saw last week with Exxon and Chevron. Let's move into the real estate arena, and let's go to SPG, Simon Property Group, one of the biggest names in the XLRE. They come in with a very good EPS number at 292 versus the expectation of 237. Revenue came in really nice as well at 1.3 versus 1.1 billion. That resulted, they weren't shut down last year, Mark. This resulted in an 18% year-over-year revenue increase, and they also slightly increased guidance as well. So a little bit of a hat trick for Simon Property Group. Technically, you're looking at this as a bearish downtrend on the backs of a bullish intermediate uptrend, and you're looking at a potential breakout following a V-shaped recovery against that 50-day moving average. Intraday, if you do look and track SPG, intraday you're looking at north of 130. A close above 130 would give you confirmation for an upward drift in price on Simon Property Group. We're going to move on, though, and we're going to talk about the healthcare space very quickly. There has not been a sector in the market that has been more consistent than the healthcare space in recent history. You're looking at a space that is very consistent. You see it riding the nine, and the one area of weakness it got gobbled up at the 20 and decided to ride the 9 again. This is an extremely hot area of the market right now. Eli Lilly is one of the bigger names in this area of the market, and they did nothing Nothing to throw any cold water on that type of price movement. Eli Lilly comes out, though, with a mixed report, in my opinion, but that shows you how hot this space is. Energy components come out, do rock star reports, 150% increases in year-over-year revenue, and they can't break out. Eli Lilly comes out, reports a very lukewarm report, but the space is hot. They get gobbled up. That is the key difference in these reports here. Lilly comes out missing on EPS numbers. They came in at 187 versus the expectation of 189. Revenue came in at slightly above the expectation, but in line at 6.7 versus 6.6. Revenue did increase 27.6% in the reaffirmed guidance. Again, not a bad report, but what it, and again, don't want to discount the price movement here, guys.
Mm-hmm.
But again, this earnings season has punished if you missed. You got to beat and beat, and you still might get punished, but you got to beat and beat. Eli Lilly doesn't beat and beat. That shows you the quality of the momentum that is happening in this space, and this space alone right now. This report comes out in any other sector in the market, I believe it gets thrown down a little bit, and it tests some very important support levels. Space is hot. Lilly gets a pass. I'm a little hesitant on the price movement, though. It's a little too hot. I do think, and Lilly's a very good company, but I do think let me put it like this: you're not chasing 3% upward movements on lukewarm earnings reports this year.
We
Agreed?
gotta wait for a reset. Gotta wait for a reset.
Yeah, and that's all I'm saying here. It's just Lilly, great company. Wait for the pattern to reset a little bit.
Mm-hmm.
And then last but certainly not least, in earnings roundup, let's talk a little bit about Baba. Alibaba comes in, and they always come in with a really healthy EPS number. They came in at 257 versus the expectation of 222. Revenue came in at 33.5 billion. They did not provide an expectation on that revenue, which means I do not know what it increased or decreased year over year. Tough to get a read on this type of report coming out of Baba.
Yeah, I dug into this one a little bit, actually. They also had some things to say about Tencent Music. Apparently, those two companies don't do business with each other, but Baba's CEO was saying some positive things about recent Chinese actions, obviously trying to get on board with the Chinese government, let them know they fully support.
Yeah,
if I owned a company, I would say some positive things about Chinese actions.
He went out of his way, guys, not joking. He went out of his way to talk about all the recent policy actions and this and that, about how he supports
Wait a
them.
second. Hold on.
Yeah.
Hold on. The Baba CEO was glowing at the Chinese. Okay. So last year they put the former CEO in basically self-defined prison. This year, China is going after seemingly every industry in China that is based on growth. And today the CEO of Alibaba says, China, we like you.
Yeah.
Okay.
Yeah.
And you know what? If I was the CEO of Baba, I'd be like, China, what do you need?
Oh, he went off on, we were willing to do data collection curves.
Tencent's horrible. Who else is horrible?
Rein in subsidies and all kinds of stuff. And by the way,
the VIPs, let's get them out of here. Just get them out of here.
Oh, it was kind of interesting to read through that one for sure. Oh, Chinese.
I don't even know what the Baba CEO's name is, but yeah.
Oh, Daniel Zhang. Daniel Zhang took over.
Good for you,
shower
Daniel.
after that one.
Hey, listen, when a cop pulls you over, I say yes, sir.
Yes, sir.
Pretty much.
Yes, sir.
Pretty much. All right. Well, the earnings ones obviously are going to be a big highlight there, Matt. We'll keep an eye on some of those. And that Eli Lilly, I think you're 100% right. Such a wonderfully strong company. Let it reset. And interesting for me is the fact that we just got the price response off of mixed numbers, because I watch you analyze these every day, and that's not what we've seen so far. So appreciate the earnings roundup there. All right, couple last quick stories, then we're going to play a little game of the Queen's Court if we can. Airline stocks, just give me the jets if you can. I don't know if you guys saw this over the last couple of days. Massive delays, in terms of people not being able to get on a flight. Anecdotally, Coach Gino can't get back from his vacation. Coach Cody also had his flight delayed.
Or is this just, or is it correlation? Did Gino cause some things to extend his vacation? I'm just saying, right?
Listen,
it was a hot and heavy travel day. The airlines have shut down as many. They don't have the same amount of flights. We'll give Gino a pass. It was a tough travel day.
Dude, 2.2 million travelers went through airports over the weekend, the highest number since pre-COVID. So yeah, people are out there, they're booking. In fact, I think Emily was on an airplane over the weekend, probably pretty crazy.
You know who hasn't been on an airplane in a year and a half?
This guy.
This guy.
Very happy to announce that.
And I'm happy.
People are flying again. Delta, now just give me a pattern I can trade.
Have fun. My feet are on the ground.
Airports were busy all over.
Busy. All right. And Pepsi is selling Tropicana to a French company, PepsiCo, 3.3 billion, something like that. Nice little pattern actually up there on Pepsi. Very, very strong report. This was a highlight out of the Queen's Court about a month ago from Coach Matt, actually. So let's move right in.
That's right.
That's right.
Right there on the breakout.
On the earnings breakout. Yeah. And that's in here we are with a new reset pattern, Matt. A little high base up there, I think could be developing. Yeah. All right. Queen's Court here today. I believe Coach Mark and Coach Tim are here to offer up our suggestions to the Queen, our analysis and our picks here. Queen, listen, I already know I'm getting my head chopped off, so I'm just going to go for it. You're up, my friend. Set this up. Explain what we're doing here.
This is how he dies. Now I'm his friend. Oh, yeah.
He told you to kiss his ass at the start of the show. And now, you're his friend.
I said none of those things. None of them.
Well, Queen's Court is a fun little game we like to play where the gentleman will present a stock. It could be a long-term trade. It could be a position trade, a swing trade, whatever. The thing is, the Queen has to like it. So most of the time, Tim will get his head chopped off, not for what he brings to the Queen's Court, but how he presents it. It's not what you bring, it's how you bring it. Okay,
hey,
so understand that.
Real quick, I am not a participant in Queen's Court today, but I am your executioner.
Oh, goodness.
Great.
Fantastic.
Pull up a chair and come sit next to me. Sharpen up your sword. We're gonna go shopping today.
I got the grinding stone going on right now.
Oh goodness.
All right, Tim, you go first.
All right. So company that grabbed my attention here in the morning as I was going through my news. Let's first start with Micron, if we can, MU. And semiconductor companies are a really interesting lot because there's so many different types of semiconductor companies. They don't all produce the same kind of product. And this is a memory producer, Micron, very fundamentally sound. For the very first time in their entire existence, they announced a dividend for the company. You, in fact, see that green little dot there on the bottom right of the chart. It's going to be in October, and that is a sign of fundamental strength, quite frankly. They also announced a very different part of their share buyback program. In the past, they had to buy it on schedule over a certain period of time. There was no timing to it, none of that. Now they're going to allow discretion into their share buyback program to at least as long as they get the money bought throughout the entire year. They've dedicated that amount of capital, a couple $billion. As long as they get it bought, they can buy it at different timing points as the CEO, the board also thinks that it's a better time to actually do it. Micron's in an interesting technical pattern after taking quite a bit of time off. In fact, I'm glad that you did come back to the weekly chart. The Fibonacci's can stay there because you're the executioner. I have nothing.
You better say something positive about where it's at on its Fibonacci retracement level.
On the weekly chart, which is big picture investor analysis, which Micron, by the way, is a great long-term stock. I actually think it has a trading opportunity here as well, Emily. It's got a 38.2% retracement into the 200 weekly moving average, two different technical catalyst points. Is that the 50 weekly moving average?
It's finding the 200 daily and the 50 weekly.
200 on the daily, 50 on the weekly, and it's got momentum characteristics that have changed here. You'll notice the three green candlesticks, but it had precipitous sell-off earlier in the year, slower sell-off, slowing momentum, reversal candidate on this pattern. And if we go back to the daily chart here from that perspective, I want to talk a little bit more about the company as we do, but I also like the short-term technical pattern here, and it's firing off today above the moving average and actually above a pivot point. It's a little bit messy from a swing trade, but I don't like Micron as a swing trade. I've never liked Micron, quite frankly, very often as a swing trade. It's not that type of company for me personally. I like it for cover calls. I like it for cash flow. I like it for long-term fundamental health. The company carries a 21 PE ratio right now coming off of the pandemic, forward P ratio at 7. Okay. It has a consistent model of profitability over the years. Mark has reminded me of this every year that I've known him, that he's been in the financial markets. Mark also loves this company. Rally today off of a W pattern on the daily into a potential breakout. And I like it two different ways. Now you can get tricky if you want to, Emily. You can go long equity, planning on writing a covered call once you hit T1. Now, that is an advanced technique that we teach in the Tackle 25 system. We talk about that through coaching and mentorship. The idea is that you start out with a delta play because you got a signal, right? Fully anticipating that you'll write a cover call. Now, that degree of difficulty is a little higher, but you're one of the best cover call traders I know. I know you could execute that. So I do think that is in play, or you could just flat out write a covered call. We're post earnings in June. About a month ago, we actually highlighted Micron's earnings. They had fine numbers, nothing stood out, and they didn't get a great price response. But we were in a different market condition at the time where there was this malaise to it. Semiconductor stocks have started to pick up here recently. We saw the breakout on AMD. We saw the breakout in many other areas of the sector.
What do we say about breakouts on AMD, Tim?
Don't miss them. And we were 100% right on this one. Look at that. You don't ever miss breakouts on AMD. Broke out, took off. So this is where I like Micron. It's simple. It's not a momentum trade like AMD, but you got all of these backdrops that are going to create some support and stability for the company. And as Mark knows, they're flush with cash. They're well run. They got one of the best CEOs in terms of leadership and just flat out run the business. No, do not mess around. Keep it in the black, all that kind of stuff in this industry. If you just want to write a cover call, it's actually got great returns on it right now as well. 31-day contracts, you can pick up a couple percent, not too bad. So Micron, covered call, or a straight stock play into a cover call if you want a little bit higher degree of difficulty. This is my Queen's Court pick for today.
Thank you very much, Tim. Appreciate that. Mark, see what you've got.
All right. So like the picks I've been bringing you the last few weeks have been into what I perceive as the strength areas of the market. It's been a tricky environment. Once again, there's markets doing good, but that doesn't mean every stock's doing good. And I've definitely wanted to play into the strength of the market recently. Defensive picks the last few weeks, and they're holding up. I'm going to bring you a little bit more aggressive of a play. CLF, give me Cleveland Cliffs. I don't have a lot of specific theme-based things on Cleveland Cliffs, but I do like how this area of the market, the metals and the minings, the US Steel, the Nucor, the Steel Dynamics, the FCX, how everything a few weeks ago, right? Everything sells off, Bloody Monday, things had been gone Thursday, Friday. This area immediately started showing strength, and continued that strength. So while so many other areas of the market are still depressed that we're selling off, this is not one of those areas, showed strength. There's obviously some thematic things that can still boost this entire industry, this entire space. Infrastructure, you still got a global economy reopening. What I like about Cleveland Cliffs specifically in these themes, in this strength area of the market, is there's a lot of ways to play it. The specific technical pattern coming into today, where you have this move up, right? Start to stretch your legs, consolidate a little bit, pull back. It sets up from some momentum potential trading opportunities, whether forming a base here at the top and then a breakout, hovering down to a moving average and then moving up. But I like the flexibility that if I'm not in a directional mood, I still have some major moving averages rising on weekly and monthly charts that can act as support for naked puts down near horizontal support. The 20 weekly has been fantastic on Cleveland Cliffs during this run up. Come down seems to be one of those buying zones where individuals come in. You look down at the 20 weekly, if you could put that on the chart. It's just been one of those areas. And that's what I oftentimes do. If I get a bullish signal to the upward, but I don't want to go to the momentum route, if that's just not what I'm feeling, I'll look to sell naked puts down near horizontal support levels that are in conjunction with rising moving averages. You got a couple of them. You got the rising 20 weekly, you got the rising 9 monthly. Both of that can act as that bridge of support. And I like the premiums I get too, because not always, I can't always just sell down into those areas that are, several. I mean, when you think about it, it's only a few dollars, but it's a pretty massive percentage looking at those areas, percentage of where the stock price is now, and get good premiums. That's not the case with Cleveland Cliffs during this run up. It's been a very, very cash flow friendly stock, to say the least. That even when we get volatility to the upside, there's been nice premiums on the way down. So I love the strength, just like I like strength in the market right now from a cash flow perspective. I don't want to get too creative. I want to let patterns play out in various areas that I'm interested that aren't quite there yet. I want to go to strength of the market, like the defensive areas that I've suggested the last few weeks. And I like this general area, and whether it's Nucor, FCX, but I think the particular situation Cleveland Cliffs is in is attractive from a flexibility standpoint on how you want to approach it. One last note. One of the things I love about Cleveland Cliffs, that if you go to their website, clevelandcliffs.com, they scoreboard it. They put their share price returns against Nucor and US Steel and Steel Dynamics right there on the front page, front and center of their website, and say, listen, these stocks are doing good, we're doing even better. And they put that front page on their website. I found that interesting, to say the least. So
they want to brag about the inflationary rate, huh?
It is literally front and center on the front page of their website. So
I would have some things to say to their CEO about that marketing message, but what do you think, Em?
If we were playing a game of locked in and you guys had CLF and MU, I would have probably said Mark was presenting MU and Tim.
I know it's weird, isn't it?
Yeah.
I mean, Mark's taking the momentum stock and trying to trade a naked put on it, and Tim's taking the beaten up Micron, recovery analysis. It's weird.
Mhm.
Very weird. You guys are throwing me off. But back on MU. Really like what is developing here, and kind of like what you talked about, Tim, with AMD kind of taking off. Once they start to run, you kind of go and look and see what else is in that space that is, could potentially do the same thing. We've done these comparisons many times with, Costco and Walmart and FedEx and UPS and so on and so forth. So with Micron sitting where it's at, kind of clearing all those moving averages and sitting right there on the 50, it's got a nice potential to a run, and we can see where it's been before, right? Like you said, if you just went straight equity and started with just buying the shares and then covering it later, or just doing a covered call right off the bat, nothing wrong with that. For me, as much as I would love to just go long equity and cover it later, just kind of based on where I am with just being out and about and not really spending as much time in the markets, I'll probably just go straight cover call. Maybe not start with the 40 delta, give myself a little bit more space, maybe go a lower delta just so I don't have to worry about having to manage the call. But definitely love that space, and I love the pattern on MU. You did call me M twice. I was counting.
Right. No, I was just saying MU, like Micron. I wasn't saying M. I was saying
no.
MU for
No.
Micron.
No, as a matter of fact, you said Emily, so we can go back and look. I counted. There was two of them.
Okay. All right.
No, he didn't. He said Emeron.
Oh, goodness. Oh. Let's take a look at CLF. I don't know. I like MU. I cannot kill you for just calling me Emily. This is happening twice, 2 weeks in a row. I really want to chop you off.
Don't you have some concern about the volatility level of Micron and covered call?
Go back to the options chain. Give me this.
I mean, it's not bad.
Give me the September.
Would you be looking to sell 85?
No, you're in October. Give me September.
Do you want the weekly?
No.
You want the monthly?
Yeah.
45 day.
I like the 85.
Yeah, that's probably
it's a known resistance level.
85 corresponds with T1. Yeah.
Yeah, it's a known resistance level, and Micron's underperforming some of those other momentum ones, so I would be a little shocked to see it break out of 85 on one movement.
Yeah, that's probably where I would lean towards, is doing the September and 85. Yep, right there at that previous resistance level. So not bad. I like that one.
Yeah, and the
Not a
idea,
perfect.
Tough area of the market, though. Semiconductors. You got some liftoff, and you got some stuck in mud. This area of the market is separating itself. It's not unlike other areas where it's like that is a sector-based thing. These are completely individual stock stories in the semis right now.
Yep, absolutely. Okay, let's take a look at
Which is
CLF.
nice,
Little,
right?
and by the way, a little bit of separation in the steel industry as well in recent history. You have the haves and the have-nots. Cleveland Cliffs just happens to be the best of the bunch.
it's been strong.
So my question I got for him is, we're doing naked put analysis on the best momentum stock in the industry.
No, I said that there's flexibility, that if you wanted to wait for the trade setup, it could develop if that is your cup of tea.
But
Are you
again, for the
Can I ask you a
queen,
question then? Are you looking at ownership at 20 on the naked put, or are you looking at cash flow?
probably cash flow. I don't know enough about Cleveland Cliffs that I would want to take ownership. So for me,
I
it would be
think-
just straight cash flow.
Seeing for me, I'm looking at Cleveland Cliffs and I'm seeing a breakout with momentum. I'm looking directionally here from a technical perspective. What's your hesitation directionally, other than you don't
None.
like no, not for you, Em. I'm like Mark. Like, I know you're typically a little hesitant directionally, but the naked put at 20, and again, I just looking for moments of clarity here. If you're looking to sell a naked put at 20, I don't know if that would be an ownership level that you would want.
It's in conjunction with moving averages that I base.
So you're doing
those
some
entry
little longer term stuff that I don't know about. Gotcha.
While you were busy sharpening your sword there, executioner, he did ask you to look at the weekly and look at this.
Well, no. I try to keep up with him, but he gave me like 3 time frames in 3 seconds. I can't click that fast, so I couldn't go from the daily to the weekly to the monthly, and I'm just like, I gave up on the monthly. I'm like, no, I got to switch time frames. Like, no.
You know, and I guess my only hesitation on Cleveland Cliffs specifically is I love, like the AMD breakout. I mean, I don't directionally trade much, but that thing was so obvious, right? And
Yeah, it was a good
sometimes
breakout.
you have these smooth trends. Cleveland Cliffs is, it's a choppy little thing, right?
Can be.
It can produce some, false signals like
Well,
it did.
it's still can be very choppy and very volatile. I mean, technically, this is the best momentum pattern that still has in the industry. It's leading the charge here. There's a couple others that are pretty decent, just to give you a little bit of a visual. Coach M, you got MT, which is not a U.S. based still company, but very similar breakout with momentum, pretty clean high base at the top. And then you have, the little engine that always does, and that's still Dynamics here, STLD. Looking at that long range neutrality, which we always love breakouts against long range neutrality, right? So Cleveland Cliffs, out of all of them, is set up more than the others, and that naked put, I think, cash flows regardless of the momentum. I'm just saying I wouldn't look to own at 20 in that type of volatility, because if it breaks, you're breaking a lot of the momentum.
Let's look at CLF.
Now, just to be clear,
Give
Mark,
me-
it was $20 naked put, correct?
Anything above the 9 monthly,
You're
which
gonna make me go out to time frames? Oh my goodness gracious.
so that would put it at 20 if you wanted to be more aggressive at 21. It lines up
And
with some of the recent, sell-off horizontal rough levels as well.
What month are you looking?
September,
Which one in September though?
the regular monthlies.
45 days out?
Yeah.
I like that 20.
See, I'm so cash flow focused. That's even
See,
though
Emmy's
it's a
like,
great directional trade.
I know, I get it.
I'm such a not a lazy, but I don't
You
want
wanna
to
go on
do a lot.
vacation again.
Yeah, exactly.
Yeah, I don't blame you.
I have to stick with Mark on this one.
Well, you're getting 63 cents against 200. I mean, it's going to round out to be a really good naked put.
Yep.
And Mark, I don't like monthly charts a lot, but I definitely see what you're seeing here.
And I
See the
just
kiss
really
there.
like it.
See the kiss
Like
there.
when you have some of the valleys and it forms up in a general horizontal zone and it lines up with something like that. I mean, it's treated me well for years. And so, with the recent strength, that's where I gravitated
I
towards.
take back what I said about the 20, not wanting to own at 20. It's rock solid.
And if it wasn't the company, right? Because, once again, ownership implies you willing to own this
Yeah.
specific company.
Mhm.
Cleveland Cliffs, that earnings report really impressed me.
Good company. Very good company.
Oh, the queen is torn. She really wants to chop off.
Emily, I sharpened my blade for like an hour
Oh,
straight.
okay,
I've been
go.
sitting
You
there
go.
going
Go
like this.
ahead. You
I
do my
can't. I wanted to so bad. I was like, I like Tim's going with Micron, and I'm like, okay, you're taking a semi off the lows, but then when you look at the technicals behind it, it's like really it looks
That's what,
pretty
yeah, and that's
decent
what I
off the
said.
lows.
If we were doing locked in, if Mark had
Yeah.
presented MU, Mark
Oh,
would have live and
you and
say
I
we'd
would have
be
got executed.
Mhm.
Like I would have put a lot of money on Tim taking Cleveland Clips. Like
Are you
Oh,
guys
yeah.
gonna jibber jabber all day, or are you gonna make a
He
decision?
just
Can I
asked
cut
for
his
it.
head?
He just asked for it.
No, you don't know
Matt,
this. Like you
Matt,
don't know this,
please.
but if this was a movie, I would have already swung. Like when he opened his mouth,
Line him
my
up,
hands
Matt.
were coming
Line
through.
him up.
I was ready. He's dead. He's not talking. The dead don't talk, bro.
Line him up, cut him off,
Dead.
and kick him off the room.
Dead.
Done.
Cut.
All right.
Oh, I got my blood.
I love that
There you
Cliff
go, buddy.
pick, by the way. Yeah, absolutely love the Cliff pick. It's been so strong. By
I
the
like
way,
'em both.
dirty, sexy money stock right there. And Micron, yeah, it did grab my attention. So hopefully a couple of good stocks out there to add to people's watch list, and appreciate the head chop there, Queen. I knew you were going to chop my head all day long. I probably
but-
could have snuck out of there, but no, she's been on vacation. She'd come back. She wanted blood. She had
Yep.
to get,
Very
she got
quickly, though,
stuck at
guys.
an airport.
Very quickly, though, still is starting to cook up a little bit. Had some short-term weakness. You see Nucor recovering a little bit. Still Dynamics, one of our darlings here at Tackle. We love, recovering off of a failed breakout following a very positive earnings announcement. You see the nice little bullish engulfing recovery kissing off the resistance levels. I even was looking internationally today at the steel companies. MT doing absolutely amazing. Still's cooking a little bit here. I like the Steel Dynamics pick.
If you want to know all of the major publicly traded steel companies, go to clevelandcliffs.com. They show them all.
I get it. You want to
I've never seen anything like it. I've never seen a company do that before, ever.
Because you shouldn't.
Just openly
Like
brag.
you shouldn't.
Yeah, that doesn't make sense.
You're
to me.
a still company.
Yeah.
act
Go and
as
produce
like
steel. Yeah.
Go produce still.
Yeah.
It's not like it's not what you're going to scoreboard for the last year. You got your ass kicked for 10 straight. What's wrong with you guys? Come on.
That chart was a recent.
I'm sorry.
addition, I
Like
imagine.
Mark, I know everybody has their cup of tea, but if I see a publicly traded company putting up their stock price against their industry, like, no, get out of here.
In an industry where the reason stock price
Shut your
appreciation's
mouth and go
happened
make money.
is because of the inflationary environment too.
Yeah, seriously.
Yeah.
You're going to brag because of the Feds giving you guys money? Really?
Yeah. I think you should chop Mark's
We
head
had
off.
to, I'm going to chop his head off too. Emily, I chopped his head off too. I killed them both. Good picks. Thanks for the money. Get out of here.
Goodness. All right.
I opened the well and tossed their bodies down. Let's go.
We're already floating down the river.
Doggone.
All right. Moving back on the market. Let's give final thoughts to start wrapping up the show here on a Tuesday. As always, appreciate the analysis, everybody. And that was a lot of fun, actually, breaking down those stocks. Emily, you're first. Thoughts for the team out there?
Just continue with your daily routine. Markets are sitting at, at resistance levels. So there's obviously something that you can look to play. I'm keeping a close eye on the NASDAQ. I'm keeping a close eye on the S&P, just waiting for those breakouts and finding something to play. I might even just play the ETFs themselves, because those are really, really nice setups there. So if you can't find anything, you can always go ETF, and especially when we're sitting on earnings season, ETF might be the better way to go, actually. So just keep doing your daily routine.
Love it. Mark, final thoughts from you.
Coach's show tonight, 8:30 Eastern. Greg and Tyler, Coach Greg, Coach Tyler, be there talking markets, with some educational concepts that they want to teach tonight, 8:30 Eastern. And if you don't have a pro membership, good time to email me at Team at Tackle Trading. I'll set you up with a free trial.
Matt, final thoughts for the team out there.
I'm still looking at Coach Christian's new scoreboard.
It's gorgeous.
I am so excited. So excited. He just has the touch. There's no doubt about that. Looking for the reports coming out this weekend, guys. We do have the new visual of the scoreboard up and running, so definitely get excited about that. I just love the creative side of what Christian Zisson brings to tackle trading in our community. Makes everything we do look so much better and just much more enjoyable. So Christian, great job on that. Outside of that, Tim, Mark, you guys are dead. Em, have a great day.
Listen to the podcast, episode 436, tradingjustice.com, or on your podcast apps. It was a fun one with Pete. Make sure that you go download that, grab this afternoon. I know you guys will love that and enjoy it. And appreciate you guys out there. If you've not done it yet, thumbs up. Click the subscribe, click the bell. We're about to that 19K mark. Looking at that 20K as a goal here at Tackle Trading. So we love you guys. Keep becoming a part of Team Tackle and join us each and every day that we go live. We'll be back tomorrow, same time.